We've been talking a lot about food inflation, and we are joined now by David Stroud. He is a former commodities trader. He is now the CEO of a hedge fund at TS Capital. He's right beside me here in the newsroom. David, thanks so much for coming in. How have these rising prices affected the market so far?
I think what's happened with, and you've got several different events, and the main theme with what's going on in the commodity markets is what's happening with the weather. You have effects of La Nina, you have
well, we had the droughts in Russia as well. That changed wheat prices.
Exactly.
I mean, there's the floods in Australia. So there's
exactly
a lot of examples.
And it's primarily weather driven. If you look at commodity prices that have moved up starting in this past June, I believe the market was anticipating a lot of this happening because several commodity traders, of course, so we look at what weather patterns are going to be because commodities, of course, are driven by supply and demand. So if we see something that's going to eat into the supply, then we can anticipate where prices are going to go. And we expected bad weather. We've gotten weather has been a lot worse than we expected.
So moving forward, when you look at these agricultural commodities, what kinds of price variations could we still see? I mean, you mentioned we've already seen a pretty significant rise, but I'm assuming there's more to come.
We have, and if you look at where commodity prices were this past year, and particularly on the agricultural side, and I believe on that chart, you can see right now that's a World Food Price Index, which is based on 55 different agricultural commodities. That's what the FAO puts out each year, and you can see the prices in 2000, right in the middle where that where the high is. That was 2007 and 2008, where you had riots.
Yeah,
riots
2008 was an awful year.
We've just surpassed 2008's level right now.
So should, as a hedge fund manager, I want to ask you this. I mean, should the investment community take steps to handicap what investors can make from trading agricultural commodities? I mean, should there be some sort of moral clause put in, and how would you respond to that as a fund manager?
Yeah, there really should be, and the thing about it going forward, because look at the other side of the transaction, and if you ask anyone who hedges for Cargill or Bunge or any of the other agricultural companies, they're going to tell you that they need someone on the other side of that transaction when they're selling short to hedge the cash crop that they have to have someone to purchase that, and that's where the hedge fund world comes in, and thus the fluctuation in prices.
David, can you make the argument that a lot of the investment in these products, when you trade futures like this, does eventually get back and help the agricultural industry, or is that a false premise?
Without a doubt, it helps the agricultural industry because they have no way of hedging their prices, and if you look at the CFTC's Commitment of Traders reports that come out every Friday afternoon, which is based on the data from the previous Tuesday. When you look at that, you can see the commercial buyers that are in there, and they need the hedgers. They need people like our fund to get in there and take the other side of the transaction. So in that way, we certainly do aid and help what the companies are doing.
David, thank you very much. David Stroud joining us there. He is the CEO of TS Capital.